This time I will call the first meeting of the House Committee on Banking and Insurance for the 2024 legislative session to order. It shows I am. We'll try again. This time we will call the first meeting of the 2024 House Banking and Insurance Committee to order. Madam Secretary, please call the roll.
Representative All.
Here.
Representative Bentley. Representative Bray. Representative Duval.
Here.
Representative Frazier Gordon. Representative Gooch. Representative Justice. Representative Lewis. Representative McPherson.
Here.
Representative Rorix.
Here.
Representative Roberts.
Here.
Representative Smith. Here. Representative Stevenson. Vice Chair Lockett.
Here.
Vice Chair Pollock.
Here.
Chairman Meredith.
Yes, ma'am. We do have a quorum and are duly constituted to do business today. Do I have any members out in the group that have guests that they would like to recognize before we get started with agendas? Representative Stevenson?
Thank you, Chair. I would just like to introduce everyone. We have a new staff member, and so this is his first committee as well. Cameron French is our is a policy analyst with our caucus. So please let's make him feel welcome.
Thank you, Representative Stevenson. Seeing no others, I do want to introduce, we have an intern with the committee this session. Mr. Braden Jennings is over here to my left. He is interning with us this session and with the Economic Development Committee. He's a junior at Kentucky Wesleyan College from Owensboro, Kentucky, majoring in political science and English, and plans on attending law school after he graduates from Kentucky Wesleyan. Braden, we're happy to have you. Hope you have a great experience during the session. We are going to change the order that I had first thought of for a few minutes, I think. At this time, I would like Vice Chair Pollock to assume the chair and call the first bill.
Our first bill this session in the banking and insurance is House Bill 88. Please introduce yourself for the record.
John Cooper with Kentucky Bankers Association.
Tim Shank, Kentucky Bankers Association.
Representative Michael Meredith, representing the 19th House District.
Thank you, sir. I think there is a committee sub here.
Make a motion on the committee sub.
Motion is made. Who got the second? Okay. Have a motion by Representative McPherson. I was going to call you. Second by Representative Bray. All those in favor say aye.
Aye.
Any opposed? Okay. Question on the sub, Representative Roberts.
Thank you, Chair Pollock. Thank you to the sponsor for bringing this bill, which I'm sure we're going to have a robust conversation on, but I just would like to point out that I really like to hear the substance of a bill before we vote on a committee sub for it. So when you describe the bill, would you please outline the changes in the sub? Thank you.
And I would be happy, Representative Roberts, to tell you the sub is mostly technical amendments that were requested by the Attorney General's office. The Attorney General's office obviously enforces the Consumer Protection Statute, and with the transition that was going on, it took a little time for them to get back to us on some things, and so they are just mostly minor technical amendments to the original bill that was before you. The definition of person, person is defined in multiple places in the Kentucky Revised Statutes. They had a preferred version they wanted to use there. That's one of the biggest changes. And then the other things are just narrowing the term civil penalty to something that can be brought by the state and not by an outside party, and making a statutory penalty for those being brought by the outside party. And again, just some minor technical things. As far as the sub goes.
Thank you for the question. Again, have a motion by Representative McPherson, second by Representative Bray. All those in favor say aye. Any opposed? Okay. The ayes have it. Substitute is adopted.
So now you have House Bill 88 with House Committee Substitute 1 before you. This is a bill that we discussed in the interim. It has three components. When we discussed it in the interim, it really had two components. And it is focused on consumer protection. Two of the three provisions are. As I have mentioned before, as we have talked in this committee, we have seen a large consolidation in the banking industry, and we're seeing a lot of changes in that space, whether it be lending, whether it be savings, and all those kinds of things. There are a lot of new fintech products out in the internet space that are lending organizations or even deposit platforms out there, savings platforms out there. But those things are not regulated in the same manner that a bank is. And so we want to make clear in the first part of this bill that only a bank is able to use the term bank, banking, or trust. And I say that because we have a banking system that has operated safe and soundly in this country for close to 200 years or longer, actually. And we want to make sure that people understand there's a difference in how a bank is regulated from safety and soundness and how other products that may provide similar services are regulated. And we want to do what we can to protect the integrity of the banking regulation system. So the first part prohibits that and provides penalties for that. The second part of the bill is where you really start the consumer protection provisions. If you have had a mortgage that you have signed in the last few years, you were likely flooded with solicitations from folks that you've never heard of. And when you looked at the solicitation, you probably couldn't even tell who they were. What you saw was your bank, your mortgage company, or your credit union's name on the face of that document, and it was on some bright colored piece of paper likely. What you'll find is they're again trying to capitalize off the name of the bank and try to mislead folks into believing that that is a solicitation coming from the bank to sell those services. And so because of First Amendment issues, we don't really feel like we can prohibit them from doing that, but we can make them put a disclaimer out there if they do use those things. And so we move that into the Consumer Protection Statute for enforcement by the Attorney General's office, but also create a right of action in the courts for the banks that are being affected to be able to sue for compensation and damages, as well as trade associations representing banks, credit unions, or other financial services providers. The third part of the bill is the new part of the bill that was not in the interim. It was an issue that I was tracking at the time, and it's an issue that deals with the Kentucky Realtors Association. And there have been a couple of brokerage firms from out of state who have been operating in multiple states but have started operating in Kentucky too. They come in, they offer a small fee, whether it be $500 up to $2,500 or $3,000, somewhere in that range, for you to list your property with them. But that listing is a 40-year real estate listing. And if you list your property within the 40 years after that contract is signed with someone else, then they invoke legal action against you. They also, as part of that, have recorded that contract and invoke it as a lien against the property. So if an elderly person was to have signed one of those contracts, they pass away, their children or grandchildren are trying to unwind that estate, they go to a real estate professional that they trust in their hometown, try to get that issue dealt with. As they go through the title opinion process and the closing process, they find that they can't use the real estate agent that they know and they trust because they've been locked into this 40-year contract. The third part of this bill would prohibit 40-year contracts, narrow those down to a 2-year contract, which is pretty standard under the law. And it would say you cannot turn those into liens against the property. Obviously, if somebody violated the 2-year provision and listed with someone else, they could potentially get a judgment lien against, which could be attached to the property, but there would not be an individual lien just because of the 40-year listing. That is what the bill seeks to do and address. I would be happy to answer any questions, or if my folks who are here at the table with me want to make any comments, be happy to do that as well.
Thank you for the testimony. Do we have any questions?
Second.
Motion on the bill by Representative Bray, second by Representative Lockett. Madam Secretary, please call the roll.
Representative All,
Yes.
Representative Bentley. Yes, ma'am. Representative Bray. Yes. Representative Duval,
Yes.
Representative Fraser Gordon,
Yes.
Representative Gooch, Representative Justice,
Present and yes.
Representative Lewis, Representative Lockett,
Yes.
Representative McPherson,
Yes.
Representative Pollock,
Yes.
Representative Rorix,
Yes.
Representative Roberts,
Yes.
Representative Smith, Representative Stevenson, Chairman Meredith.
Yes.
Four favorably, expressed concern. So this should shall pass. Thank you for testimony as amended. Thank you.
Thank you, Mr. Chairman, members of the committee.
Yes, thank you. Thank you, members of the committee. Appreciate it.
That out of the way, we will now call House Bill 179. Representative Heverin, if you and those who are with you would come forward, introduce yourselves for the record, and then you may proceed with your testimony. I do believe you all have some guests on by Zoom as well. Is that correct?
We do, Chairman.
Is that link active? Do we see? Are they up? Okay. Just wanted to make sure I couldn't see anybody up there. Good deal. You all please proceed.
Thank you. I am State Representative Samara Heverin. I represent the 18th District.
Charles All, I'm the Executive Director of the Kentucky Chamber Center for Policy and Research.
And our friends on Zoom.
I'm Laura Lee Latta. I'm with the American Council of Life Insurers.
And I am Sarah Montgomery. I am with the American Council of Life Insurers as well.
Please proceed.
Thank you, Mr. Chairman. Mr. Chairman and members of the Banking and Insurance Committee, I appreciate you all allowing me to present in front of you this afternoon on House Bill 179, in-coil model legislation on voluntary paid family leave insurance. I began conversations on paid family leave with a bipartisan working group of Kentucky stakeholders in December of 2021. The biggest questions were, what can we come up with that strengthens Kentucky families, doesn't hurt Kentucky small businesses, and can pass the Kentucky General Assembly? We looked at what variables were needed to consider: type of leave, qualifying events, eligible workers, definition of family, funding mechanism, who would administrate the program, wage replacement rate, and duration of leave and exceptions. House Bill 179 is the first piece of this puzzle. Voluntary paid family leave insurance is an insurance product that employers may voluntarily purchase to provide paid family leave benefits to their employees. This is a market-driven policy proposal that includes no mandates. Let me be specific. No mandates on employers, workers, or families. Paid family leave insurance would provide a temporary wage replacement for workers who need to take leave to provide care for a sick family member, bond with a child after the child's birth, adoption, or placement for foster care, care for a family member in the military or first responders who were injured in the line of duty, or for other reasons outlined in the employer's plan. Mr. Chairman, there were questions whether members like state government or teachers could participate in this, and the current language would allow that. It doesn't exempt them from that. Here's why we're doing this bill, though. Legislation is needed to authorize the sale of paid family leave insurance. Insurers can only offer products that the Department of Insurance is allowed to by statute to authorize. Therefore, state law needs to be amended in order to clarify the ability of the department to authorize this insurance product in Kentucky. At least 6 states have already passed this legislation or promulgated regulations to authorize model paid family leave insurance under a model endorsed by the bipartisan National Council of Insurance Legislators. These states include Alabama, Arkansas, Florida, Tennessee, Texas, and Virginia. Other states include Georgia, Indiana, Ohio, and South Carolina. They are considering in-coil legislation now. Now, let me be clear, Mr. Chairman, the legislation will not be enough for everyone, but in my humble opinion, it's more important to pass good policy rather than to completely deprive Kentucky families the opportunity to have some type of paid family leave here in the Commonwealth. And also, this should not be a new concept for members of the Kentucky General Assembly. In the fall, the Kentucky Chamber and the ACLI presented in Families and Children Committee on this model legislation. We believe that this is a first great step for Kentucky. and then I will let my other members speak as well.
Well, thank you, Representative Heverin, for bringing this legislation. Thank you to this committee. Thank you to Chairman Meredith for the opportunity to give this a hearing. The Kentucky Chamber fully supports this legislation. This is a great bill. The core functionality of this bill is to essentially allow a new insurance product to come online, to authorize the development and sale of paid family leave insurance within the Commonwealth. And from an employer perspective, this brings about a lot of strong benefits for Kentucky employers. With this type of product, this is something that could be helpful for attracting and retaining talent. For employers that are already offering some form of paid family leave insurance, primarily through a self-insured model, this could be an opportunity for them to potentially reduce their total cost. It could also allow them to expand benefits. More importantly, though, for employers who are interested in offering this type of benefit, this type of insurance product could make that more financially feasible for them to do so, depending on how the product is ultimately structured. I do think it's important to emphasize from a competitiveness standpoint. Employers in Tennessee will soon be allowed to authorize this or offer this type of benefits. Employers in Virginia are already able to do so. We know Indiana is taking a close look at this. States like Texas, Florida, Arkansas, those states have already passed legislation to authorize this. So anytime we see a tool that employers in other states can use, we always want to make sure that that becomes available to Kentucky employers as well. So there are a lot of benefits for this from the perspective of the Kentucky business community. This is, of course, something that's also really good, though, for children and families as well. The research on paid leave articulates very clearly that there's significant benefits that are afforded to families that are able to utilize this type of benefit structure. And so that's a key component as we think this through. So on the whole, this is legislation that I think helps our business community, helps children, helps families all at the same time, and we strongly urge its support.
Laura Lee, if you want to go.
Thank you. I'll say again, I'm Laura Lee Latta with the American Council of Life Insurers. We advocate on behalf of 280 member companies who help 90 million American families achieve financial security. I think most of the wonderful points about this bill have been said. I'll just add that these benefits, the paid medical and family leave benefits, are increasingly popular from an employee perspective. We found this really helps increase employee retention, morale, and reduce employee turnover. There is definitely a desire and appetite for these types of benefits. Our current existing disability insurance products do provide income replacement for employees themselves when they need time away from work. But as has been said, adding paid family leave insurance to the insurance code would allow carriers to offer family leave benefits that complement this disability insurance, and to provide income replacement when employees need time away from work, not for themselves, but to care for their family members with a serious illness or to bond with a child. So we believe that the legislation before you authorizes any insurer to authorized to transact life or disability income insurance to issue a PFL policy, either as a rider to a disability insurance policy or a separate policy of insurance. And critically, this legislation would expand voluntary options for employers in the Commonwealth. This would really enable carriers to create paid family leave products that best suit their employers. So employers can really design plans under the construct of this model that would fit within their budget, that would meet their individual workplace planning needs, and would fully support their employees in the ways that they know best. So we strongly support this legislation, and we're happy to answer any questions that we can.
Mr. Chairman, that's all.
Thank you. We do have several questions from members of the committee, so we'll get started with Representative Pearson.
Yes, so is there a waiting period? Because a lot of these probably are planned situations, maybe are planned pregnancies, and or maybe a surgery in the family, or maybe taking care of a loved one, that elderly parents or something. That is there a waiting period? And then afterwards, as this situation maybe changes and goes away, is there a period that you would have to continue this policy? Is there any period like that that's finite into this concept here?
I'll offer one quick response, just I think it will be helpful for all questions like this one and similar to it, and then invite our folks with ACLI to comment further. But one of the core components of the idea behind this legislation is to create for maximum flexibility for both for the insurers in designing those plans, but also for the employers that would be purchasing them and implementing them in the context of their workplace. So I want to make sure that's a theme that's well understood with this. With that, I turn over to Sarah or Laura Lee to comment more directly.
Charles, I couldn't have said it better. It is, these programs are, as I said, that what's great about this piece of legislation is it is designed with flexibility. So, and it would be whether or not to include a waiting period would be a variable option to help an employer. It would just be a slight change in premium up or down. If a waiting period was included, it would be at the employer's choice.
I think Representative McPherson, that would be something that the free market would work out itself.
Okay. That's all. I didn't know if we were structured in. Thank you, Mr. Chairman.
Representative Hall.
Thank you, Mr. Chairman. Not to confuse the viewers at home, but Charles is a distant cousin, and we get confused quite a lot. So Charles All versus Chad All. Number two, we have had a lot of conversation in this start of the General Assembly about openness and slowing down the process, and the way legislation moves through the General Assembly. So I want to commend the sponsor for proactively reaching out yesterday to talk to me about the bill and some questions we had, and kind of being open in that process. So thank you for doing that. When we spoke, you said this is basically an in-coil model piece of legislation, which I'm excited about. Could you explain? You said there were just a very few differences between the basic in-coil model and the piece of legislation we have here in front of us today. Could you briefly explain those differences for us?
I will start, and then if Charles has anything to add, I will let him. But I think a lot of it was to form with our already insurance laws in Kentucky. So I know one question had been why it was. Hold on, let me find it. So why it was classified as health insurance rather than health or disability. And it's because in Kentucky, it appears that a state-alone disability income insurance policy is classified as health insurance. So really anything that was changed was just to conform with current Kentucky statute. Do you have anything to add, Charles?
I believe one other I think difference is the specific mention of care for a first responder injured in the line of duty, which I think in the in-coil model, it specifies members of the military. So this would be in addition to that. So I think there's just nuanced differences like that, to my understanding.
And so thank you for that. Just one comment. Great piece of legislation. I do think it's a good start. I think your comment at the beginning to your 3 items in consideration of the bill and what can pass this General Assembly. And I believe something is better than nothing in this space, and that's why I'm going to vote for this bill. We talked, I wish it would go a little further, but I'm realistic in what we can get through, and I commend you for bringing this piece of legislation. Thank you.
Representative Stevenson.
Thank you, Mr. Chair. Can you all talk just a little bit about what some of the expected premiums could be? And are you seeing a big difference between states that have mandated this versus states that have not? Yes, I'm going to let Sarah or Laura Lee answer that. Okay.
Thank you very much for this question. Because this is a voluntary product that is flexible, it is difficult to assign a specific premium because it will, in the mandated states, the rate is driven by a mandated period of time, for example, a 12-week benefit or a 20-week benefit. In this case, just to give you an idea of the ratio, because the program, again, is designed to be flexible and it complement disability insurance. Typical disability insurance plans, again, it will depend on specific plan design of the employer, but a general plan would usually have a 26-week duration for an employee's own medical condition. Most complementary paid family and medical leave programs that are designed based on a 12-week duration for bonding or to care for a family member, based on those two kind of different durations, and with a 66% wage replacement percentage of the employee's salary, the premium for that policy, the PFL premium would be basically runs about a quarter of what the disability insurance policy would run. Again, due to the differences in the way durations and income replacement is flexible under this model, I would not want to put out a dollar amount, but the ratio is an easier way to kind of look at the two coverages for the existing disability market, and then to look at the lower percentage for the PFML coverage, usually because the durations are shorter.
Okay. Thank you. I appreciate that. You know, I was just wanting to try to get, as we all go in and we sign up for all of these extra things as we're doing our open enrollment every October, we all know some things are $3, some things are $30, and some things are $300. So I was just trying to get a little better feel for what that is. So I appreciate that. I appreciate you bringing this bill forward. I think it's great. Like Representative All, there are some things in here that I wish it would go a little further, but I understand that not putting a mandate on it is something that we need to do at this moment. I just really hope that we have a lot of people that take advantage of this. In particular, I hope state government takes advantage of this. I think that we as state government should be setting the example of how we want small businesses, large corporations, anybody to be treating their employees. So I think that this is a really great thing to start offering to families. You know, as we know, very unexpected things happen sometimes, and these things can't be helped, and this is going to be really helpful to a lot of families. So thanks.
Representative Smith?
Thank you, Mr. Chairman. I think this might be more directed to the chamber. First of all, Representative Herron, thank you for not mandating it to get started, because I think things need to show themselves and show the positives to it before we get into forcing it on people. But in my area, I'm more concerned about the smaller businesses, from 1 to 20 employees. Today, in our environment, to me, it looks like it could also be a recruiting tool to go after employees, and we have a shortage as it is. So in saying that, is there any vision on you seeing that happening by taking advantage of being able to offer this to employees that are working for a small business to pull them away? We already have that, that shortage going on, but is your mindset, it was just mentioned in the last testimony, large corporations. I'm more emphasized in my area on small businesses. So is that something on your mind, or has that been on your mind, or is it even anything you've addressed?
I'll start us off. Thank you for your question, Representative Odell Smith. It was actually in the very beginning when we had these conversations. There were members of the majority caucus that were small business owners who wanted to be plugged into this conversation, and they felt like if we did a mandate that it would hurt them because that's not something they could offer. And so from my perspective, with the insurance policy, it's for your small businesses, it's for your large businesses, and so it levels the playing field. And it gives them the opportunity to have that same tool to recruit and to have retention within their employees. Okay. So that's what I'll add. Charles, if you have anything else.
Yes, thank you for that question. It's a great question. Absolutely, that would be the intent, that this would make offering paid family leave benefits more financially feasible for smaller employers. Again, a lot of that's going to depend on things like program design, as we've talked about. I do think a couple things to keep in mind. Activity at the federal level could influence a lot of that and determine the outcomes of exactly what you're discussing. There's been a paid family leave work group that's been a bipartisan work group in Congress throughout the past year or so, and they actually released their framework for things that they had agreed on, and this includes conservatives, folks on the left, everybody and everywhere in between. But one of the components of that framework were some discussions around association-style plans that might allow more small businesses to sort of come together and increase their purchasing power for these types of products. So that's something to keep in mind. There's also always talks of federal tax credits that could help small businesses offer these types of benefits and maybe cut into some of the premiums that they would pay in order to deliver these things. So there's some federal activity that I think could incentivize this, and those are things that I think this legislation keeps in mind.
Okay. Just a quick follow-up, Mr. Chairman. We find that that's going to be something that we're losing in Kentucky as we drop our income tax. We've used it in the past as an incentive. So I know where you're coming from, maybe doing it as a federal incentive. Just keep in mind that that there is areas that we don't want to introduce things and cause things to pull people away from our area. So I'm just being mindful of that. And incentives do that. And I don't blame people for trying to take the best, and find the best abilities for the family, similar to child care. I'm all for it. I think it's needed and mostly needed in my area to allow people to work. But I just like for the chamber to keep that in mind, that we have those that only have 5 employees or 10 employees. But I support the endeavor, and I think it's great that we're doing these things. But I just like to keep those in mind, the ones that don't have the checkbooks that the corporations have to offer these things all the time. So I appreciate it.
Representative Rourke.
Thank you, Mr. Chair. I wanted to just say thank you to Rep. Heverin for bringing the bill. I also serve on your committee with Family and Children's and was really encouraged to hear this discussed this past year. So I think it's a really important first step that we take in this measure, and we love to see an incoil model, so that's always encouraging as well. And I would just say that family planning is increasingly important for folks, and particularly retaining our women in the workforce. So I think that this is great, and it's in providing that opportunity to make us more competitive with our surrounding states, and it makes our businesses able to attract more diverse folks. And it's such an important conversation to be having, coupled with the childcare needs that we'll be discussing this session. So I just wanted to thank you for all your efforts, and I'm glad to see this as an important first step.
Any other committee members with questions at this time? Have a motion from Representative Smith. Second, Representative Lockett. Madam Secretary, please call the roll.
Representative All.
Aye.
Representative Bentley.
Yes.
Representative Bray.
Yes.
Representative Duval.
Yes.
Representative Fraser Gordon. Yes. Representative Gooch. Representative Justice.
Yes.
Representative Lewis. Representative Lockett.
Yes.
Representative McPherson.
Yes.
Representative Pollock.
Yes.
Representative Rourke.
Yes.
Representative Roberts.
Yes.
Representative Smith. Representative Stevenson. Chairman Meredith.
Yes, House Bill 179 does pass with favorable expression. Same should on the House floor. Thank you, Representative Heverin and panelists, for the presentation, and congratulations.
Thank you, Mr. Chairman.
We don't have any more business before us. Do I hear a motion to adjourn? Motion, Representative Lockett. Second, Representative McPherson. All in favor, say aye. We are adjourned.